No,
You know what I mean?
California.
No, that's how it is, but it's hard to like.
You have to like adjust to it.
Yeah.
It's just like different, expensive.
Really?
Yeah.
That'd be a cool car.
Cause they're supposed
Not for splitting it though. You could always look at getting.
Yeah.
here, but the rumors that.
Yeah.
Also.
All right. Good morning, good morning, good morning. So in today's class, we're going to be talking about escrow, title, and lender. Great, okay. Before we get into that, I have a question from someone. So regarding our duties as agents, if we're on the listing side or the buy side, doesn't matter. We have to fill out something called an AVID, it's Agent Visual Inspection Disclosure. So what do we do as agents? We're going to sign a listing agreement or we're going to write an offer. At that point, it's up to the buyer to wire their money to escrow. Right. So we're either taking a listing, looking for a buyer, or we're representing a buyer writing an offer. This chair's thinking. So, right. Okay. So as the agent, we're either on the seller side or the buyer side, doesn't matter. We have to walk through the property and describe what we see, anything not working or broken. So we're not supposed to be inspectors. It's not our job, but we do need to give a visual inspection. So that is the criteria. Now on the transfer disclosure statement that's filled out by a seller, there's a little 3 or 4 lines for the agent to tell everything they know about the property. So obviously it's not enough. We can't do that on 3 lines. So there's a little checkbox that says see attached agent visual inspection disclosure. So we just check the box on the TDS. It's the only place where we write on the TDS, by the way. The transfer disclosure statement should only be filled out by the seller. If the seller wants you to fill out the disclosure for them, never ever do that, because what could happen is they can sue you. Why? The buyer's going to come and say you didn't disclose this, you didn't disclose that, and the seller can come back and say, well, I told my agent to put it there and he didn't, and right, and then the agent has liability. So never fill out anything for your client. Okay, so for the AVID, when I do my AVID, it's just saying, the entry, the living room, the kitchen, bathrooms, bedrooms. You need to describe things that you're seeing, but I don't use adjectives, because what's very small to a seller, like the seller's like, that's nothing. That's not seller says that's nothing. The buyer's like, that's huge. What do you mean? So it's right, depending on if you're on the buy side or sell side, it's big or small. So I don't use adjectives. So when I walk through a property, at the entry, I'll look at the door. If there's scratches on the door, I'll just write scratches on door. If I see scratches on the floor in the living room on the hardwood, very normal. Scratches on floor. If there's marks on the walls, I'll just say marks on walls. Even if it's big or small, I don't care. I'm just writing marks on wall. If there's any windows, like the glass is cracked somewhere, I'll just say crack in glass pane. I don't say big crack, small crack. I don't do that. Just crack in glass pane. I go into the bathrooms. I look at the tiles. Are there any cracks in the tiles? If you see a hole in the wall, you say hole in the wall. So that's it. So I just pretend that my client is not present and relying on me to give them a sort of description for the property. So I say to myself, if my client came to the property without seeing it, would they be upset with me? Like, how did you not tell me about? That's how I look at the AVID when I'm filling it out. How did you not tell me about it? Of course, I'm talking about it. So the AVID also gives us the ability to disclose something that the seller may have forgotten to on the TDS. Right, so we can put it there as long as everything is disclosed to the buyer before they remove their contingencies. Okay. All right. So that answers that as our duty as an agent. So we just need to get disclosures to the buyer. Our transaction coordinator will help us do that. I will help you do that. But as far as our job, it's to fill that out. Okay, so today we're talking about escrow, title, and lending. We have can I say the #1 title agent in the country? In the back of the room. We're very blessed to have Lauren Goldman here. He's the #1 title. Okay, yes. I worked with Lauren for most of my career. In the beginning of my career, I was working with Brandon, who's also in this office. And I was very loyal. And Lauren would come into my open houses and say, JJ, when are you gonna use me for title? I'd say, Lauren, I love you, but you know, I have this relationship with Brandon. And Lauren would say, you can use us both. It's okay. Give me some business. And I'd say, Lauren, really, really. And then he'd come back to my next open house, my next open house, my next open house. It taught me persistence overcomes resistance. So that's a motto that I use. Persistence overcomes resistance. Because I was very resistant. And he just kept coming back to my open house persistently. And I after that, I started using Lauren because he proved himself. I used to think to myself, title gets paid this money and there's no issue. Like, what is title doing for this money? Like, it's a big chunk of money that's going from the seller. They're paying this title fee. What is that? And I would think, oh man, it's like, but Lauren is here to tell you how important title is. I can tell you how important title is. When you guys have cash buyers, it's really important that for them to have title. Like, the lender is going to make them have a title policy, but you know, a cash buyer can do whatever they want, but they would be absolutely insane to not have a title policy. Lauren will, I'm sure, can talk about that, but basically what title does for my view is title ensures the buyer that they are getting ownership of the property and no one's gonna come and say, hey, I have a claim to this. So the buyer is getting insurance for that, right? So if I'm buying a property, the seller is paying for a policy that I own this property. If I'm getting a loan, that's the only thing that should be owed on that property, right? And there will be other things that appear on title. So let's have Lauren come on up. Lauren, please, and share with us.
Yeah, that is not property of not selling. My property are not selling in Beverly, long time. And they.
I knew that. John, if I knew that,
No.
I'd be on that side of the commission, not this one. But thank you, JJ. What a great intro. I was very persistent, bordering on pain in the ass.
Persistence overcomes resistance. It does, right?
It's a fine line there between pain in the ass and persistence. I
No,
learned
I
that a
mean,
long time
If,
ago.
if someone says to you, like, I have an agent, say, well, can I be your backup? Can I be your backup agent? Right?
That's fantastic. Love the loyalty. You're going to see my name on a contract, and it's a small town. It is. It's Beverly Hills is a small town. West Side is a small town, which is why you have to be nice to other agents. You've heard that before.
Oh, yeah.
And you know, you got to respect the title relationships. But as JJ said, there's a lot of moving parts in title. There are a lot of moving parts. So it's my job to navigate that for you, for your seller, for your buyer, for the lender, for the escrow, for everybody involved. So I'm the one central place that kind of navigates that world. And it's sometimes it's very simple stuff, and sometimes it is crazy, because
When it's crazy,
crazy,
that's when Lauren really shows how awesome he is. Because,
Yeah.
well, from my experience, Lauren can make deals happen that other title companies cannot. And that just has to do with his experience and the company that he's working with, right?
Well, he said, I'm number one at First American nationwide for an individual rep. And it helps being here in Beverly Hills for 28 years. And of course, being here at Beverly Hills, West Side, that helps too. But like you guys, I'm commissioned. So I've last 28, running around like a crazy person, being a pain in the ass.
I love when I receive an offer and it says Lauren Goldman.
Yeah.
So I love it.
Yeah.
Love it. Any questions about title? Like, title is, what is title? What is it?
So it's the insurance policy guaranteeing truly the ownership from seller to buyer. And we make sure that everything that needs to be taken care of is taken care of. So the right signatures on the grant deed, whether it's an LLC trust, deaths, divorces, you name it, whoever's left standing, and we require all kinds of paperwork to get to that decision that the right people sign. We make sure all loans are paid off, the taxes are paid. There's stuff that's on the property of against the real estate, and then there's the off-record stuff, liens, judgments, IRS, franchise tax board, that is not against the real estate, but it affects the person selling. Therefore, it affects title. So it blends all of this together, and it's a bunch of legacy documents from the building of the property. So when the property was developed, there are most likely easements for the water, the power and the gas and the sewers and stuff. That will always be there. There is covenants with the city. The city says, okay, builder, you have to record this, you have, so that will always kind of be there. The stuff that changes is the money stuff, the ownership stuff, liens, judgments, and we need to get to a place where title's clean so we can transfer it to the buyer. The buyer at the end of it is my insured. Even though the seller may pay for it, the buyer owns this insurance policy. And the basic tenant and title is what we miss, we pay for. So all of this, it's insurance. So you guys, car insurance, life insurance, you go through an underwriting process. And at the end of it, we say, okay, we're ready to issue this policy. And if we missed anything, if there's a signature we missed, if there's money we missed, if there's some kind of misstep that causes either diminished value or financial, whatever, on us.
And,
You protect buyer, yeah?
Sorry?
Protect
it
buyer.
protects the
yes.
buyers. Protects-
Yeah, JJ said that, you know, nobody, like very few don't get a title policy.
Oh, very
I-
few, but
I've never seen it.
no, but if someone buys a property at a foreclosure, they're crazy. First of all, they're crazy, but maybe that's their right, but they're,
Then they, if they're gonna sit on the property, then when you go to the foreclosure auction, you're the highest bidder, you know, at the courthouse steps and you get the property, then you're gonna get a trustee's deed. You should obviously record that deed. If you're gonna keep the property, then you should get title insurance. If you're gonna sell it, you're gonna wait until you sell.
here's the danger of people buying at foreclosures. You're gonna have clients say, hey, I want to buy a foreclosure, I want to buy a foreclosure. The danger is they may think they're buying a first that's gonna wipe out all the junior liens. They may not be buying a first. They might be buying a second. And when you buy something at auction, everything that was recorded before it is still on title. So, right?
You can't check it,
So the advantage of buying a property that's not in foreclosure is title's checking it and they're ensuring that you're buying a first,
But if-
that there won't be any other loans.
in foreclosure, you're taking a chance.
Foreclosure, you're taking a chance. So people that are they do this professionally, they're buying a lot. So they're able to spread their risk out across a lot of properties. When you buy one, two, that's really risky. Right?
Maybe you talk to the bank that has got the loan on the property.
But the
Doesn't it
bank will
take?
talk to you because you're not the borrower.
Oh,
The bank will only talk to the borrower
really? Oh, you don't talk as a client, say, I'm interested, I want to buy.
can drive, but most of the time they're not going
They
to.
won't give you all the detailed information on that.
If you get information on a property from me that you think is going to foreclosure, then you're gonna see the deed of trust that's foreclosing. The first thing that happens is they change the trustee. That's the first sign something's going south. And the trustee gets changed from, like, say, Bank of America's trustee to ABC Foreclosure Service. It's a clue. And then notice of default comes, notice of trustee sale comes, then they actually have the foreclosure date.
Where I see the opportunity for us as agents is people that are late on their mortgage payments. That's where the opportunity is. You want to approach those homeowners prior to the foreclosure auction and say, hey, let's list your property. That's how we're going to get you the most money for your property. That's where the real money is for us.
How do you know they're late?
You really, I don't have that info because it's not public record.
Once they record a notice of default.
Notice of default's different because then I've got to record a document and the lender
Notice of default.
has recorded something for public record saying, hey, this loan is in default.
Difference between notice and default and pre-foreclosure?
That's what
It's
Oh, it's the same.
changeable.
It's the same.
If you're asking if I can get a list of people that have missed payments and are behind on their payments, there are people out there in the world that sell this. I don't know how good it is. I don't know where the info comes from, but title is regulated pretty heavily by the state. So California tells me what I can and cannot do. So I can't tap into that database and then send it out. Not compliant.
Okay.
But we could be notified about notice.
I was gonna say in the clear mark title thing, does it show up like if a person?
Oh, so in our regular MLS, if we look at public records, there's along the top, the first thing I always look for is if there's a foreclosure tab.
My app has the tab that if you want all the foreclosures in zip codes
Yeah.
recorded in the last 30, 60, 90 days, easy stuff. easy, because it's a document. I can search for that.
We don't know if someone's late on payments, but the bank hasn't recorded something. Then I guess there are private people that know it, but not.
Some for resale property to go on foreclosure, then to accept a lower offer. I don't understand what's house on Camden.
There's a lot of tricks.
I mean,
My-
they was late on the agent was helping the owner to pay the mortgage. Yet they got a good offer, they didn't accept it, they went into foreclosure. What is that? I mean, what?
Every feels different. Every scenario is different.
My opinion really is, first of all, unless you have an investor, for chasing foreclosures is really just not a good business plan. I mean, these are people.
Thinking for me, I spent years.
Yeah.
It's not a good way to spend your
You
time.
got a buyer that says, I want foreclosures, or there's 99 properties that he should look at, and you're focusing on the one. That's in
You're
foreclosure.
tracking.
Facing the seller.
You're tracking, that's what you want to do. Because properties that are late, you're like watching it. There's a scheduled auction date, right? And you're calling Lauren and you're getting all this information for your buyer. And we're gonna show up at the auction with our cashier's checks, right? And meanwhile, you don't even have a commission on it. So you better make sure that you're getting paid.
A lot of defaults get cured.
And then anything can happen. You go to the auction and it says we're postponed. Postponed, removed. Then never went to auction. So you've done all this work on all these properties and nothing. It's a lot of work. I suggest not going that route. If you do want to, so where am I going to get my next listing? There are people that have to sell. Who has to sell? Divorces have to sell. People that are late have to sell. Right? People that are expanding, downsizing.
Some people put their property on the market for the long time, it's not sold, then they put it on the auction. Now, in this case, let's say they auction the property,
What kind of auction?
a regular sale auction, like,
It's different auctions. There's different types of auctions.
I mean, they have a
I'm talking right now, someone who's late, the
Yeah.
bank filed a notice of default,
yeah,
and then the property went to sale as a trustee sale. That's different than these other kinds of auctions that you're seeing
yes,
sometimes. Different scenarios. So there's a brokerage down the street, Hardfords.
yeah.
They have these auctions that are not really auctions.
They advertisement,
High reserve, it's the some of their way of marketing the property, but it's not really,
it's not option.
unless you hit the minimum.
They've since done away with the options.
Okay.
Couple weeks, they've just done away.
Oh, they've done away with it. Okay, so yeah, if it's not working, it's not working. I mean, but there are other types of auctions. That's why my question to you was what type of auction? That's really.
A regular auction, there was a property that, but they didn't sell the high price property. The guy said, I'm gonna put it on the auction. So it did say, can you change the title on that property? If it is on if the auction, you can do that. That's not foreclosure. Right?
Correct. It's a seller that didn't get their price and has to sell.
I'm gonna auction.
So the auction gives them certainty that on a certain date, it will sell at a certain price.
Yeah,
If they don't get their minimum, it won't sell. But it hopefully gives them certainty that it's over.
So for us as agents, I think it's important that we know how to explain what title is to our clients. Right? So title, it's an insurance policy.
yeah,
It's an insurance policy. It ensures the buyer they are getting complete ownership of a property. And they also are being notified of anyone that has a right to come onto their property. Right? Because it's going to show utility access, right? It's going to say, or you can't build on the rear 5 feet of the property, right? Because there's a utility easement where they can go and work on the poles, right? So that's all going to appear on a title report.
Driveway easement.
Driveway easement, setback, maybe easement kind of thing. And not a setback because that's a zoning issue, but of maybe an easement where you cannot build on a certain portion of land because the utility company has the right to access. You may have a property where the neighbor has the right to drive over your driveway. Because they have an easement on this particular property to use the driveway, right? So that all appears on title. So the seller customarily in our area here in LA, I don't know how it is in different parts of California have different customs. Our custom here in LA is that the seller will pay, and everything's negotiable, but the seller will pay for the buyer's title policy. That's customary. The seller will pay for this. Now, if the buyer on their own wants to get a loan, the buyer is going to pay an extra little fee for the lender. So the seller insures the buyer. And if the buyer elects to have a loan, they're gonna insure their lender for title. Now, one thing I do want to bring up, if you have a flipper client, right? You have a client who's gonna immediately redo the property and put the property back on the market. There's something called a binder. Why don't you tell us?
Sure. A binder is the right to prepay today for a discount tomorrow. Right? It's good for 2 years. So if I buy a property today at closing, I'll say to the title company, bill me for a binder. If the seller's title fee is $3,000, the binder's 10%. So the buyer, me, will pay $300 additional, not toward the $3,000, just $300 additional for that binder. And I have the right to sell it within 2 years at a discounted rate. Say if I don't sell it within 2 years, the binder's gone. You can actually extend it for another year, but
So think about this. Your buyer buys the property. The seller paid a $3,000 title policy, right? Now your buyer is fixing the property and then they go to sell it. Instead of paying a new $3,000 policy for the new buyer, they could have bought a $300 binder back when they bought it and not have to pay this $3,000 or a discount.
because he puts money into it, he fixes it up and then he sells it for more, right? So the new title fee based on the higher sale price, when the guy's done, say it commands a $3,300 title fee. Right? Instead of paying $3,300, he's going to pay the difference between the $3,000 and the $3,300. He's going to pay $300. Factor in the $300 that he paid when he closed. That's $600 for title instead of $3,300.
Just from you guys being in this class today and hearing that when you deal with a flipper client buyer and you recommend, hey, do you want to get a binder?
That's value.
You just saved your client $3,000.
But you're married to the title company that did the original closing. So if I, First American Title, did the original purchase, then going forward, when the guy goes to sell it within 2 years, he has to come back to me at First American to get that discount. No other title company can honor that because he prepaid specifically with this company.
But it's-
When the buyer can buy this binder, is during escrow?
It's normally done
At close.
That's close.
I think, yeah.
Yeah, and if it doesn't do it at close, we can talk.
Does that also apply when the property is bought as an individual and then they switch it over as a trust? Like, how does that process work?
So here, this is where you're going, I believe. When you buy a property, I'm going to back up just a little bit to answer, I think, better. The lender, if there's a lender, they're going to tell you how you're going to hold title because you're not going to go directly into your trust. The trust didn't qualify for the loan. You know, the trust doesn't have a W-2. The trust. So the lender's saying that, husband and wife, you can do joint tenants, community property, whatever. But they're saying these two people who signed the loan docs must be on title at closing. You can transfer it to your trust the next day. Perfectly fine. But at closing, that's what they want. When you transfer from an individual to your trust, your title insurance carries over. But if you transfer from an individual to an LLC, you lost it. Your title insurance is no good anymore. What you should do is go back to the company that insured you on the original transaction, buy an endorsement, a 3.5 endorsement, which is $100, which the insurance will carry over from that individual that you closed at to your LLC. It's $100. And if you don't do that, you lost your title insurance. So if there's a claim down the road 20 years later, title company's going to go, hey, we insured these people, not this LLC.
But what's the difference between the seller's insurance policy and the buyer insurance policy?
So as JJ said, when there's a loan, there's two policies going down. There's two policies, same transaction, same company. The first one is the owner's policy, that $3,000 policy from seller to buyer, insuring the buyer, okay? If the buyer gets a loan, the buyer will buy a lender policy of title for the benefit of their lender. The lender it's cheaper. Instead of the $3,000, depends on loan amount, but it's $600, $700, $800 in that range, depending on a 20, 30% down, something like that. But it ensures the lender that they're lending on the right property, the right borrower, the right legal description, and most important is that they're first position deed of trust. So if anybody comes out of the woodwork and says, you didn't pay me, you owe me money, that lender's guaranteed to have their hand out first for repayment.
That's because you guys, oh, thank you.
So just to clarify, I mean, I know that you guys all learned this when you were studying for your license, but you probably didn't concentrate on it. So first position, second position, third position, everything goes in the order of when it was recorded, right? So if I record a loan against a property today and someone records one next month, I get paid first when that property sells. If there's any money left over to pay them, then they get the extra. If there's money left over, then it goes back to the seller, right? But because my loan was recorded first, I'm in first priority position. So I need to make sure if I'm loaning money on a property, what position I'm in. Very important,
Yeah.
right? So if someone's saying, JJ, can I borrow $500,000 for this property? I'm gonna call Lauren. I'm gonna say, Lauren, can you do a title search, please, on this property? Because I need to know what's in front of me. Who's getting paid before me? If I'm gonna put my $500,000, I need to make sure there's at least $500,000 of equity left in this property after the junior liens or the senior liens in front of me get paid.
Hmm.
Right? So if there's a property worth 2 million and I'm being asked for $500,000, I need to make sure that the property, well, first of all, the property is worth 2 million, and I need to make sure that there's not more than 1.5 million in front of me. Right? That's getting, so then my $500,000 is secured. So that's where title comes in. That's why it's risky to go to foreclosure auctions. Sometimes you think you're buying the first and you're actually buying the second.
If somebody has it.
That's right. You thought you were buying the first, and all of a sudden someone comes out of the woodwork and says, no. No, that was the second.
They put a lien on the property, they have to get paid by the new buyer.
Whoever.
Why do you have to pay them?
So there were, yeah, so I mean, we can talk about foreclosures. I don't think it's the right way to spend your time. If you're gonna go after foreclosures, go after people that are late. There's notice of default. You can go to those sellers and say, hey, you know, if your property ends up going to auction, you're gonna probably get like 85% of value for your property at the auction. Let's put it on the market. I'll talk to the trustee that we just listed the property. And we'll try to get an extension on your foreclosure date and get a buyer willing to pay market value for your property. That's a really great thing for us agents to do.
Can I give you guys like a common thing that you'll trip across?
Yeah.
For sure, is changes of ownership multiple times, and then you're confused on who owns the property.
Ah,
And it's fine because you can record anything. If it's recordable, it'll get recorded. So anybody can like fill out a document. I got blank documents on the website. You fill them out. And then you can go walk to the recorder window. There's a bunch of them around town and pay your money. And you've got to record a deed that says, I now own this property. Or, you know, Aunt Sally just transferred it to me. Look, I have a recorded deed. It's fine. And my report will reflect that deed. What we do though, is we back everything up to the last insured when there was a title policy. And then we start cleaning up going forward, all of these, what we call uninsured transfers. Even husband to wife, even from father to daughter, you name it. We clean those up with affidavits. It's legal. You guys can give your property to anybody you want, perfectly legal. We just want to make sure that it is willing, valid, and not fraud. Fraud is a big thing in our business, right? Because we didn't record that deed. We don't know the notary. So we kind of roll everything back again and we say, okay, JJ, did you mean to record the deed to this person? And he signs an affidavit saying yes, then I'll revest my title report into that person. And sometimes we have multiple layers. And then when somebody dies, there's an affidavit. So you have husband and wife, okay, joint tenants. All right. So husband dies, the wife will record an affidavit death of joint tenant. It'll have his death certificate on that recorded document. Right. So then I will immediately vest to the wife's name. Community property, same way. If it's a trust, then and you have two trustees, husband and wife as co-trustees of the trust. One dies, give me an affidavit death of trustee to record, and then I'll vest it in her name. So a lot of times we need to see the trust in order to like actually make that happen if the trusts are not recorded. So once I see the trust and verify all of this, like a successor trustee, let's say she passes away and Now that the kids are taking over, I need a copy of the trust to verify who the successor trustee is.
So another thing that we'll talk about, when escrow is opened, there's going to be something for the buyer and the seller to fill out. It's called a statement of information. What's your name? What's your date of birth? Where were you born? Right? Where do you currently work? Where did you live previously?
Social security number.
Social security number. Why do we need the statement of information?
Because title is responsible for not only collecting what's secured against the real estate, like a deed of trust is recorded against the property. We're responsible for finding things in what's called a general index, kind of the neverland of liens and judgments, not secured against the real estate, but secured against somebody's name. So if there is, my name is Lauren Goldman. If there is an IRS lien against Lauren Goldman, they don't have to find my properties and record a judgment. JJ takes me to court, wins, he got a judgment against. He doesn't need to record because, like I said, I can go to the recorder window and change ownership from Lauren Goldman to an LLC, to something else, where you punch in my name, you're not going to find it. Perfectly legal though. But it's title's responsibility again, we roll it back and we see Lauren was in title and he transferred it here. Hey, that judgment hits Lauren because this transfer was uninsured. The insurance cleans up these unsecured liens and judgments. Title's responsible for finding all of them. Franchise tax board, your garden variety judgment, you name it. And it must be paid, settled.
So if you buy a property from Adam Smith, right? How do you know that's the Adam Smith that owns the property?
Right, it's a common name.
Right.
So like we put that Adam Smith in that general index and it blows up because I got 10,000 of them, right? So that's why we want date of birth, social, where you've lived, that kind of stuff. So we can kind
So
of.
basically, title is ensuring the buyer that yes, that is the correct Adam Smith that you're buying property.
Title comes towards the end of the.
Titles involved, the transactions. So immediately,
As an agent, what if you have no idea?
as soon as you open escrow, the escrow officer will be looking in your purchase contract who you and the other agent, the buyer and seller, picked for title. And they'll immediately open a title policy.
Before you even get started, you say, I have a potential listing and I'll give you a property profile.
Whenever I sign a listing, I say, hi, Lauren, just signed this listing. Can you please start a preliminary title report?
Even before, because you haven't taken the listing yet.
What happens if you have a buyer that walks into a property they want to close in 5 days? All right, cash offer, I need to close in 5 days. You can actually be delayed because it's going to take time for title to do their thing. This is why Lauren's saying, do it right away. Get it right away.
When you're sizing up somebody, a listing, get a property profile. It's free, it's quick, and it's accurate, meaning we will tell you who the owner is, we'll tell you the open loans on the property. If there's a lawsuit or something like that, I'm a contractor, we'll find all that stuff. So at least before you even go to the person's house to sit in their living room, talk about the listing, you've got an idea of who you're talking to and what loans are on the property. Then you take the listing. Once you take the listing, then you come back to me and you say, okay, I got the listing. A preliminary title report, not a property profile, but a prelim. That's when you want this in your pocket for the listing, because somebody's going to walk in and it's like a disclosure item. Here's the and somebody says, hey, JJ, I'm going to write on your listing. JJ is going to say, great, write in this escrow company and write in Lauren First American Title. That way there's not a lot of counters. And he's going to give that agent who's writing an offer a copy of the preliminary title report. And like disclosure, they see the loans on the property, they see the easements on the property, they know what they're getting into. They're going to decide if they're going to go forward with their inspections and spend time and money, getting into escrow in this property. If you're representing a buyer, the listing agent should have done this. The listing agent should have a prelim in their pocket. Ask for it from the listing agent, because I'm not going to run a preliminary title report because they're just not going to use it, right? They're going to use the listing agent's report, but get it from them. Pass it by me, and I'll tell you if there's any hair on that report that will stop you from it. Maybe you have to go to probate and this thing's going to sit for 30, 60 days. Maybe there's something egregious in there.
Whenever you guys are dealing with where someone's passed away, the first thing I personally will look at is I'll pull up the public record and see if the property was in a trust. If someone passed away. If it's in a trust, we're probably okay, everything's fine. If the property was not in a trust, then you're gonna get title involved right away.
Can the new owner, and the new owner get let's say that the property falls out of the escrow and there's a new owner, you buy it. Can he get the title policy of that property?
Yeah,
If you buy it instead of paying you, can you get a new one?
title reports really have nothing to do with the buyer.
Oh,
It's all about the property and the seller. Those off-record matters from the seller and the property, the taxes, the loans, the ownership. The buyer's on a cover sheet. So if the buyer bombs out,
Then the
Change
next,
the
then the
cover
next
sheet.
buyer will be insured.
next one.
They're insuring the buyer, but it doesn't matter who the buyer is.
yeah, the buyer just watches it happen.
Some question, as an agent, so we can help buyer to put an title. What can I say?
So you're just, so basically, so what's gonna happen in the real world? You're gonna open escrow. The escrow officer is gonna look who is the title company.
The buyer.
And the escrow will open title, they'll open the title.
Off the contract, they go off the contract.
They go off the contract because this title, who the title company is and who the escrow company is, that's negotiable between the buyer and the seller. So usually the buyer will put in their title company and their escrow company. Or they'll write seller's choice sometimes.
No,
and then-
it's not a question.
Oh, yeah,
The question is, my buyer put her own name or with her husband, so can they help them to choose how to put on
Yeah,
title?
yeah, I have a sheet that I can send you that shows the different ways of holding title. Community property, right of survivorship, joint tenancy, tenants in common. There's a sheet with grids that shows but again, at the end of the day, if they're getting a loan, the lender's gonna dictate a lot of this. If they're paying all cash, they can take title any way they want.
Okay,
I'm curious,
I'm afraid that you're asking for someone might be asking you for legal advice how they should hold title.
so we cannot do that.
We cannot do that.
Yeah.
But there is a sheet showing the methods of holding title. And that's what we can give them.
Can I comment?
Questions about it, they really should be contacting their CPA or attorney.
Sure.
It doesn't matter how they take title right now. It matters how they take title right now for the future when they sell the property.
Like it's estate planning.
Before,
How do you-
they put their own name or their husband and wife name, so we need to know before.
So
right?
California is a community property state. Right?
For,
But California is a community property state. So if I buy a property in my name today, my wife automatically owns it 100 with me.
Yeah.
It's community property. We both own it together, right? Even if I take title in my name.
Right.
The only way that she will not be owning that property is if she signs a quitclaim deed for her interest to me. Right? So that's gonna be required by her to sign.
so we cannot help buyer to.
Here's something I saw in 2004, 2005. Made me crazy. There were lenders that were saying who has the higher credit score.
Yeah.
And having the other spouse quitclaim their interest to the other spouse and refinance.
Yeah, to get the loan.
It was making me crazy. I would get there, I'd see these documents and I'd be like, do you realize you're giving away your interest in this property? And I'd be like, what?
But it's in divorces,
Country thing, yeah.
Crazy.
in divorces, the attorneys are working on this. They understand that one spouse will get it, one will buy the other out. And we just kind of wait for that to settle. And there should be a quick claim deed, however they say. I need a document. I need a document for the title chain. So it flows correctly. You can't just have an interest in a spouse disappear out of nowhere. The county recorder will not accept the deed going forward. Like what happened to Mary's interest in the property? But even if I own a property myself before I got married and I make all the payments, whatever, and then I get myself a new wife, okay? And then something happens where I want to sell the property. She's never been on title, ever on anything. I need her signature. Because the one thing title doesn't like and we don't want is litigation. So if she comes back, it's a community property state, she comes back and says, Lauren sold this property and I never knew about it and I'm getting screwed and I'm gonna sue. She has every right to sue us and we'd probably have to cough up 50% of it. So
If you guys ever own a property, if you ever own a property
doesn't matter.
as sole and separate property, if you own that property separately, all the expenses from that property better be paid from a bank account that's a sole and separate bank account. Because if you start using a joint account, you just,
But
you
we
might.
don't even check that. We don't even
Yeah,
check.
that's-
The
that's-
only way
Once
to
it's
avoid
joint, it's joint.
the only way to avoid her signature in this transaction is if she quit claims off the property. She signs a document, gets recorded, and it's off the property, even though she's never been on the property. Okay, but because it's a community property state here, she has every right to sue. She will sue her husband, of course, she'll sue the title company. So if there's a seller information sheet, something is, you check off that you're married, even though it says JJ sole and separate, he checks that box saying he's married, red flag, we go, oh, we need the wife.
But
Hey,
after,
good morning, guys.
but before marriage,
We have a question online. Yes.
before marriage.
Yeah. Hey, JJ and Lauren, this is Jimmy V. So I've always made it a practice, and I know other listing agents do it as well. You know, we use XX Escrow Company and XX Title Company, right? So I'm currently going through the process of renewing my license, and you know, I'm having to take all these courses and do all that stuff. So the rest of section 9 specifically says it prohibits a seller from requiring the home buyer to use a particular title insurance company, either directly or indirectly as a condition of sale. We've been practicing this.
I
but it says
get, so
it's
let
illegal.
me answer. I think I know where you're going with this.
Sure.
The buyer can choose any title company they want to, but the seller doesn't have to pay for it. If the seller is paying, the seller gets to choose what title company they're using. If the buyer wants to pay for their own title insurance company, they're more than welcome to. But the seller cannot be forced to pay for a certain title company.
First of all, title is not mandated by law. Don't have to have title. I've never seen anyone do a real estate transaction and not get title in my 33 years doing this. Never seen it, but it's not mandated by law. And what JJ is talking about, and Timothy's talking about, is if in this transaction we discussed earlier, that lender title fee of $600, $700, $800 for the buyer. If the buyer says, I don't want to use the same title company as the owner's policy, the buyer says, I want to use my own title company, that fee will now explode to $1,500, $1,800. Once the buyer sees that, they don't do it. They get back in line and use the same company.
Did that answer your question, Jimmy?
Yeah, it definitely did. Once I read this, I've been meaning to ask.
Yeah, because the
somebody
buyer
in-
can absolutely,
in
the
the
buyer
office.
can absolutely use whatever title company they want to. But the seller doesn't have to be forced to pay for it.
Can be two different company, can be two different company.
It's double insurance.
It doesn't
Doesn't make
happen.
sense.
Once they see the cost, it doesn't happen.
You're not going to be insured twice for this.
But you said the buyer can choose any.
Right. But what I'm saying is the seller is going to pay for a policy, but
Yeah.
because the seller is paying, they
Yeah.
get to choose who they're paying for. If the buyer wants, right, then everything is negotiable. All negotiable.
You have to pay.
Let me cover something real quick that you need to understand is that without title insurance, if JJ buys my property without title insurance and he goes on his way, fine. No law says he has to have title insurance. In the future, when JJ goes to sell or refinance the property, the title policy, the report will come out in my name. Even though I sold this to him many, many years ago, it'll come out in my name. And he's going to have to come find me to clear his title. So now I'm either divorced, I'm dead, I've got judgments, I've got all kinds of stuff going on. And
That's what we call it, cloud on title.
and now all of a sudden he's dead in the water.
Yeah.
All right, he is absolutely dead. So without title cut this clean between he and I. If he didn't get it, I don't care if it's 20, 30 years, he'll have to go back to my heirs. Get them to sign off in order for him to sell or refi. the property.
Sometimes you have a loan, you know, when someone makes a loan on a property, they record a deed of trust. The only way to remove that deed of trust is a reconveyance deed that says that it was paid off. Sometimes someone makes a loan on a property and they die. And that deed, that reconveyance deed never gets recorded, and now title has to insure the buyer on a loan that was paid off, but never filed a deed, that reconveyance deed. So that's where Lauren.
If you see a loan on a property that's B of A, Wells, Chase, all that stuff, you're fine, right? You can always find them. But if the loan is made by
Private.
John Smith,
Yeah.
you got a problem. You gotta find them.
All right, any other questions? Final.
What is it called? When someone can come into your land, what is that?
They have an
Easement.
easement on your property.
Can you get that remote? That would be what.
Can I do this real quick? So the neighbor, you're looking at a property and the seller says, hey, buyer. The neighbor says the fence is 3 feet over onto their side. Okay, they've just disclosed something. The neighbor has disclosed to the seller that they believe the fence is 3 feet over onto their property. That's a disclosure, of course, but we call it an encroachment, not an easement, because no documents recorded. It's just somebody saying something. How do they know this? Do they have a survey? So first thing, you come to me and I'll say, well, how do we know this? Well, the neighbor just said it. All right, the neighbor should have a survey, a lot line survey to prove it, because otherwise they're eyeballing stuff and eyeballing doesn't work. Let's say they get a survey and it proves that it's 3 feet over. It's still an encroachment. The encroachment will go into the title report as an exception. So you, the buyer, because the seller disclosed this to you, buyer, the buyer buys the property. They can't go to the title company and say, I now want to claim a title coverage for the encroachment, and that, pay to get the fence moved back to the property line. You knew about this buyer going in, so the claim will be denied. Again, that's an encroachment.
And then it would allow the other person to that.
Well, it's just something that's like a TDS. It's been disclosed.
Oh,
So buyer can't come back once they buy and say, I now want to place a claim to move the fence. It'll be denied because it's been disclosed. Once the lawyers get a hold of this, we'll find that out. What should happen is the encroachment should be formalized into an easement. An easement means that lot line survey creates a legal description of that 3 feet. It goes on to a document, a quitclaim deed. The neighbor whose a property it's on signs that quitclaim deed. We record it. It goes into the title report as an easement. So now it's formal. It's recognized. It's something that's of record, and I can't remove it. The neighbor whose property it sits on, must remove it.
oh, the person so let's say it's.
I have no.
My land, I can get it removed? No. Like, let's say you have an easement and you're coming through my property. Can I get it removed? And you're my neighbor.
If I have an easement to travel through your property, I'm the one that needs to remove it, and I'm not going to. Why would I?
Oh, so you can't get rid of, I can't get rid of it.
No,
Oh,
because I have that right by deed to go through your property. Why would I give up that right?
I see.
It takes my signature to give up that right.
Oh,
Not gonna do it.
that makes sense.
You can go to court and try to get it removed, but I'm not.
It's a
Your
real life scenario here.
Your office here, do you have it on?
Every day I have an office across the street.
Our office currently has this house listed for sale. If you look at this house, right, okay, look at the driveway and look at the driveway.
My parents.
If this has
Two garages.
shared driveway, this house has a garage and this house has its own garage. But they both need to go down this driveway to access their garage. Right, so we asked Lauren for a title, to check title, if there's an easement. Does this property owner have an easement to use this, and this property owner have an easement to, right?
Yeah.
Because it's affecting both properties. The property line goes right down the middle.
So it does.
It turns out there's no easement. Now, right now, both of these properties are owned by the same owner,
Oh,
okay? But we're selling one of them.
So yeah.
So
You can't give yourself an easement, okay? But upon sale, at recording of one of the houses, they should record an easement allowing the other to travel over it. Because the property line, I believe, goes right down the middle of the driveway. All right, and they just didn't contemplate when these homes were built in the 20s, 30s, 40s that you would ever need one.
What do we do? What's gonna happen now?
What's gonna happen is my best advice to them, what did I say? Leave it alone. Leave it alone because nobody, nobody contemplated it at the time. Do you want the extra time and expense of creating an easement now? Now that it's being sold, I guess, maybe it's a good idea in case you get,
So don't, we need to protect everybody, don't we?
How much is it?
yeah, if.
How much is an easement? How much is it? Is there a fee?
Not really, it's the surveyor to create the legal description.
So someone has to come, a surveyor now has to come and plot the one.
But-
And that's it, right? Because
If since they're owned by the same person, upon sale, yeah.
it's the same family, but
If
different.
I was the seller, I wouldn't want to spend the money, but the buyer probably would say, I want it, I want it, I want it.
Yeah.
Yeah,
Because what if the neighbor next door becomes a hole and, and all of a sudden,
So the seller on the other side could demolish the property and build whatever the setback is from that line, right?
see, but
Or they're gonna box out that person.
but in reality, the lawyers will take over, which I hate, but in reality, the way it will settle itself is you have to have access to your property. You have to have vehicular access to your garage. If not, it diminishes the value. An attorney will go to court and get a prescriptive easement like, hey, judge, the owner won't give it to us, but look, we have to access our garage. It devalues the property. Grant us an easement, judge. And the judge will probably do it. Unfortunately, it comes to that. That'll probably.
This is a real life scenario of like when you guys are gonna be talking to title and say, hey, I need to know, is there an easement? Right? So.
What if he puts a fence, I'm sorry, a gate right there?
Yeah.
We get all kinds, but, if it's,
It needs to be protected. If he doesn't have an easement there, the other guy can say you can't park here. You don't have it, you can't park in your driveway. He's not protected. He has to have it.
it's down the middle, so the cars today are much bigger, you can't just squeeze in on 5 feet of driveway. So, if a neighbor truly does that,
Yeah.
get involved. How many times have I seen that in my career? Not that many.
My parents have it. We have 3 houses at the end and they all share a driveway. They didn't do anything about it. They just all agreed that it can be shared.
And in a case like that, when a property is subdivided like that, there's like a flag lot, where there's a property on the street and then there's a property behind it. There's always new developers today will create an easement to get to the back of the property. Frankly, the city in the planning division will insist on it. You've got these homes that were built way back in the day, right off the street. They just never did it.
Access to his building in downtown. Of these under the freeway, so I guess. And the entrance to the back of his building have to do that, so he pays.
He rents access from the city. Nice.
So I was like, oh, now I guess you shouldn't have done that.
You say a few words about it, he spend this, maybe people don't know. He spend this.
This is a lawsuit. A lawsuit on the property, everything stops. Because you can't unwind a real estate transaction. You can't say, "Oh, sorry, I lost the lawsuit. I gotta give it back."
Okay.
Everything stops. And I have to have a recorded deed expunging that lawsuit.
Do you check on that if there is he spend this on the property on the title? Does the title checks if there is a?
Yeah.
That's
100%. And if we miss it, we're in a world of trouble. But
yeah.
a lawsuit stops
Yeah,
everything.
thank you.
Thank you, Lauren. Thank you.
Thank you.
Business card, how do you?
Yeah.
That's Jay.
We're all in sales, and you will need a good title guy in your career. I have all the bells and whistles, the tools. We are the actual insurance company. And as JJ said, it gets tough here on the west side for title. You need a guy who can navigate the company for you. That's what I do. And but I need good young people to keep it going. So,
Sometimes you guys are gonna write offers. And the listing agent is gonna insist on their title company. Try to fight for Lauren, because they all know who Lauren is. Try to fight for her. If you can't get Lauren, and you come up with an issue where title's saying they can't do the deal, immediately bring it to Lauren. And, Lauren sure can figure out how to do it. And, so
There's a lot of company-owned title companies. This company has one, Compass has one, Caldwell has one, you name it. And they try to push business to those people. There's a lot of fine people there. I'm not affiliated with anybody. We're just a Fortune 500 company. We're the actual one. I'm not the guy in the corner selling you the Allstate policy. I'm Allstate, So I can take much more risk. I have a lot of more leeway. I can get much more creative on the risk decision. And I know who to ask, what to ask for, what I can get away with. And my specialty is no drama. So I don't run around, honestly, this is crazy. I don't run around with, back and forth like a ping pong ball, a hair on fire. Oh my God, we need this. No, I will tell you exactly what it's going to take to clear whatever issue. And if buyer and seller are willing, then it happens.
Okay.
Take my cards. And by the way, an app, phone and computer, just outstanding for property info, all that kind of stuff. A lot of title companies have one.
Which one do you recommend?
If we did our own, we didn't buy one off the shelf. So hit me up. I'll get you mine.
Okay.
Yeah. Thank you.
Thank you, Lauren.
In the office, because we're all gonna meet somewhere.
Nice to meet you.
Send me something so we trade it.
Yes. We're all gonna meet somewhere.
Yeah.
Lily, I'll be in here.
I just want to talk briefly about escrow. So just because people are going to ask you, what is escrow? Why is it so important? Escrow is really the glue that holds the entire transaction together. And having a good escrow officer is going to determine whether you ever work with your client again. You have a bad escrow officer, chances are your client will never use you again as an agent. So when you don't have an escrow officer that's on top of your transaction, things just will not get done on time, and everyone's going to be upset. So let's just look at this really quick. I'll get there fast like it. So the seller will usually pay commissions. Right? Now, again, this is negotiable, right? But seller will usually pay commissions. I don't think anything's changing. When I get, we're now in August. It might be earlier, but the law says starting August 15th now, we'll no longer be able to publish commissions in the MLS. When I go on a listing appointment and I'm talking to a seller, and seller's like, do I need to pay the buyer side commission? Of course you need to pay the commission. I mean, come on, where's the money coming from? Right? The buyer is being approved for how much they can buy. They don't have extra money. Like, most buyers will not have extra money to pay commissions. Don't you want to be the seller that's advertising commission, having agents bring their buyers?
Yeah.
Of course, nothing's changed.
Nothing I need.
Nothing's changed. Right. So the seller will usually pay for the title insurance. We just talked about that. Half the escrow fee. All right. So escrow fees. Escrow is a neutral party. They're totally neutral. So that means that anything that escrow does has to be signed off by the buyer and the seller. The escrow cannot take a unilateral instruction. It has to be joint agreed upon. Okay, so the seller will pay for the seller's escrow fees. The buyer will pay for the buyer's escrow fees.
Can you mention your own personal, how you do it?
Yeah, so
The same low rate?
So yes, so I mean, when we write our offers, most agents will check the box each to pay their own fee. When I write my offer, I don't put each to pay their own fee. I write each to pay the same low rate. Because if the seller is insisting on their escrow company, I want to make sure my buyer is getting the same deal that they're. Right. I'm just trying to play fair here. If you're getting a great deal, I want to make sure I'm getting a great deal. If you put each to pay their own, the numbers could be totally different. The seller can pay 0, the buyer can pay 4,000. So when I write my offers, each to pay the same low rate. So our escrow officer Pele just walked by. Pele Keith. Try to get her on the way back, but it's normal for the seller to pay for city and county transfer taxes, HOA fees, natural hazard disclosure. Escrow is going to be responsible to make sure they have payoffs for all the loans. Escrow is gonna prorate everything. Let's talk really quickly about proration. The seller is responsible for all the fees on the property up until the day they sell. Make sense? Of course, it's their property. They're responsible for everything up until the day they sell. Buyer is responsible to pay for things from the time they buy moving forward. So there's gonna be a lot of proration involved. If the seller has paid their property tax in advance, the seller is gonna get reimbursed property tax from the time the buyer buys. So the buyer is going to be reimbursing the seller for their prepaid property tax, prepaid HOA fee, right? And anything else that they prepaid. Now what's going to happen is the buyer is reimbursing the seller based upon their old property tax. The buyer is going to have a new property tax based upon the new purchase price. They're going to reimburse the seller for the prepaid, but then the buyer is going to get a new tax bill called a supplemental. Okay, so just so you guys know, it, supplemental. Well, the buyer is going to have to pay any new loan charges, the lender's title insurance policy. We talked about that. So the seller pays for the owner's title policy. The buyer pays for the lender's title policy. They'll pay their fee, escrow fee, next month's HOA dues, of course. Fire insurance. The buyer has to pay a fire insurance policy for a whole year. That's usually going to be a lender requirement. That whatever that premium is for the year on the insurance, the buyer is going to pay that. The seller will usually pay for the home warranty. This is saying the buyer, but we always ask for the seller to pay the home warranty. And the buyer will pay inspections, yes. And okay. What else do we got here? Okay, escrow. What is an escrow? Escrow is the deposit of money and documents by two or more parties with a neutral party. So when you sell a property, what's actually happening? There's something called a grant deed. And it says seller A, seller B, for valuable consideration, hereby grants the property to buyer A and buyer B. Great. That's a deed that gets notarized. It's a grant deed. The recording of that grant deed at the county recorder is the transfer of the property. That's it. Now, let's say I have a bag of cash, right? And I want to buy a property from Richard. So I have Richard, here's my bag of cash. You go record that grant deed and then I'll give you my cash. And you're like, no, go away. You give me your cash first and then I'll go record the grant deed. And I'm like, I'm not giving you my cash till that's recorded. So that's why we need an escrow. Escrow is going to collect my cash. Escrow is going to collect the signed grant deed. Once escrow is in possession of both, then they'll record the grant deed and then give Richard the cash. Right? Now, so what's happening is escrow is also responsible for finding out money on this property and paying them off. So escrow is in touch with everybody. Escrow is in touch with the buyer's agent, the seller's agent, the buyer, the seller, the lender, the title company, right? And they're doing all this. So escrow has a lot to do. All right, so let's see, what is title insurance? We talked about that today. So we're gonna open the escrow, close the escrow, yeah, get paid. Okay, life of an escrow. So the realtor calls to open the escrow. Escrow prepares instructions. So this is what's gonna happen. We got an accepted offer. We're gonna email escrow, hey, we're opening escrow. Here's our accepted offer. Escrow is now going to say, what's the buyer's contact information? Because I need to send them wire instructions, right? So escrow is gonna prepare escrow instructions and wire instructions. We need to review the escrow instructions and make sure all the dates are correct. I can tell you 70% of the time, there's a date wrong somewhere, and we'll catch it. So we need to know the date of acceptance, what's the date of closing of escrow, how many days does the buyer have for loan contingency, appraisal contingency, inspections, right? So that's what we're keeping track of. Escrow is going to get signatures from everybody. They're going to open title. This buyer needs to review the report. The escrow is going to ask for payoff demands from all the lenders. So escrow is going to immediately see who are the lenders, and they're going to say, hey, I need a payoff demand for a close of escrow date of this, how much pay off the loan. So the escrow has to do that. They're going to open the title report. The buyer is now going to be reviewing everything, including HOA documents. So escrow is also in touch with the HOA. If you guys open an escrow and there's an HOA involved, tell escrow, hey, the property's in an HOA, we need the HOA docs. Okay. Everyone needs to return their documents. Escrow. And that's it. Escrow is gonna get the property recorded. So that's really, but my advice to you is use Pele, because I know Pele is amazing and she's here. You can always go up to her and say, hey, how's my escrow going? The danger, the reason that most agents will insist on using their escrow company, listing agents, is because they've had a bad escrow before. And they don't want that to repeat. When you have a bad escrow officer, you'll lose your client because this won't get done on time. This won't get done on time, right? There's just delay after delay after delay. A 30-day escrow is a very fast moving escrow. It seems like forever for us because we're waiting for our check. But 30 days is fast. There's a lot that needs to happen behind the scenes. All right, the third part of today is lender. I really don't have much to say about lending, except you want to make sure that this property, that your deal gets funded. Because if your deal doesn't get funded, you're not getting paid, buyer's not getting their property. If you're the listing agent, you want to make sure that the buyer who has an offer in is really going to get a loan. There's a lot of, if you're getting an offer that has a Wells Fargo, Citibank, Bank of America, Chase, if they're providing a pre-approval like that, that's pretty solid. Okay, that's good. Because in order for those banks to generate that letter, they had to put everything into the computer. No problem. It's when you get the ma and pa broker, loan broker pre-approvals, those are the ones that are concerning. I don't know who that is. Anyone can write a letter. You might want to have that buyer pre-qualify. Our Rocket Mortgage people have said they'll pre-qualify any offer that comes in for free. They'll talk to the buyer, they'll talk to the lender that they want to use. You might have situations where you recommend the buyer to have a backup lender, right? So you can ask Rocket Mortgage, if you have a buyer that insists on using their lender, this happens all the time. You have a buyer, they insist on using their lender, ask the buyer to contact Rocket Mortgage, just keep them as backup, right? Rocket Mortgage will do everything and have their file prepared. Rocket Mortgage they can close a deal in 5 days, 8 days, 10 days. Pretty amazing from start to finish. So just know that we have that in our pocket, but it's always good for your buyer to have a backup lender. Because, I don't want to see you guys lose your deals, right? I don't want to see your buyers lose their deals. So that's it for today. Any questions? I know we got a lot from Lauren. That was great. So we do have 3 title officers here. Lauren is with First American. Brandon Miller, also excellent with Fidelity. And we have our stud. What's his name?
Jerry.
Jerry Ferret.
Hey, Jerry.
Jerry Ferret's a big title. What a handsome guy. So all 3 great title guys. Take your pick. Any and all are good. Escrow, of course, Pele is great. Lending, we're so lucky to have Rocket Mortgage. The fact that I can write an offer with a 21-day close, no problem. So. All right, guys, have an awesome day.
It's across the street that says Glendale.
Oh, he has an office on Beverly. Yeah, he's right here in Beverly Drive. I didn't even know that. He just told me that a couple of weeks ago.
Oh, that was in
He
Beverly.
has an office right here in Beverly. He has his own little space
On the Canon?
on Beverly Drive.
Beverly Drive, oh, yeah.
Yeah,
Is he best on email or phone?
he is great. Anyway.
Very nice.
All right, guys, have an awesome, productive day.
Thank you.
Thank you, everyone.
What do you have tomorrow?
Tomorrow is Red Day,
Oh, radio, no,
so we are donating our
Yeah.